Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, July 11th. Hope everybody had a wonderful weekend, and it was nice and beautiful over here in Southern California, especially at the beach. We're kind of busy around here. So let's take a look. Economic news releases is actually nothing to report today. So we'll kind of keep this short and sweet and move on to the headline news, which is what's moving the markets today. The stock market's down pretty big today. A lot of it has to do with the rollover, the news from the job numbers that came out on Friday, which if you watched Friday's report, came in pretty abysmal. Came in at I think it was 18,000 jobs when they're expecting about 125. So quite the opposite of what the ADP reported. So, and then also some renewed concerns over Europe's debt crisis. Especially because Italy's been paying, I guess they're paying some higher yields on their bonds. So as a result of, that there's not comfort, a lot of people aren't comfortable with a possible that they may need a bailout at some point, as we kind of mentioned with Spain. But so far Spain's kind of avoided it. So obviously there's, with Greece having to come to light over the last couple of weeks and having to get theirs renewed. Now you got Italy. So, and then also Chinese are supposed to get their China's going to start reporting their second quarter growth. GDP is expected to shrink. So that's going to obviously play a factor into the world economy as to what's moving, what's not. As they're talking about, because they're trying to stave off inflation, so they're raising their rates over there to slow things down. Obviously that's going to have a ripple effect on the U.S. So let's go ahead and take a look here at the bond market, see what interest rates are doing. We had a decent rally. We did close up about par 53 on Friday, so that was good. We stayed above the par 40, as we had mentioned. Had a huge opening gap, as you could see here, about 31 basis points. So interest rates are much higher today, or much better today. So not higher, but actually lower, so much more improved, was my meaning. So interest rates are better today as we open at par 84. Now, I don't suspect we will keep this. I mean, we may at least come down, test it, come down and close this gap. Maybe not today, but maybe tomorrow. Close the gap and come back up again. But obviously, we don't want to keep an open gap here. But today, interest rates are looking much better today. And again, we may have a point at some time this week where it might come down, close the gap, and close back up again. So, and then work our way up to have a nice solid foundation here. All right, folks, have a wonderful day. And again, if you guys are looking to buy a home, keep me in mind, as I am a mortgage planner with First Cal Mortgage, and I also can assist with refinance needs. So contact me through my website at californiamortgagetips.com. Have a wonderful day.